This is a follow-up video to the Polaris Trade Management System application to discuss the price intervals worksheet. This video is brought to you by PolarisInvesting.com, a site for creating defensible valuations. A reminder, business value is based on expectation derived from skillful consideration of past facts and future possibilities. Before discussing how to use the price intervals worksheet, I'm going to first discuss the purpose of the worksheet. Well, since we're looking at this Public Services Enterprise Group, or PEG ticker, let's go look at the PEG ticker worksheet. We see here that up through today, that since the last time we did an order, namely here on July 1st, the price has decreased by 6.7%. Then we see over here in the chart, this last week or so is showing up here at the very end of the chart. But it's kind of difficult to see what's really going on there. And then if you just look in this column, you can go back and look at lots of percentage changes week to week. But sometimes you like to just drill in or even expand out and get a better idea of what's been going on for a different period than what this graph shows. Price intervals charts prices, either adjusted close, the default, or close, depending on the data retrieval method selected. The ticker worksheets chart return. Well, this is done for two reasons. One is to get a complementary view of what's been going on with the stock relative to its price movement, as opposed to this percent change from week to week. And by looking at prices, we can also use the Yahoo Finance site for additional insight into price movements. Now, you may wonder why not just use the Yahoo Finance site exclusively. Well, a significant issue is the data is not always aligned with the period and interval you are interested in. You can view a wide assortment of indicators. The price interval worksheet only shows a best fit indicator, so the Yahoo Finance site is helpful in further exploring price changes. Okay, next we're going to discuss the navigation and use of the price intervals worksheet. Just like with other worksheets in this spreadsheet, any cell with a gray background is intended for user input. You can see on this worksheet, the majority of these gray cells are located here in the upper left corner. A1 is where you do a drop down and select one of the tickers that you're currently evaluating. The same list of tickers that you've got going here is in the drop down on this worksheet. Next, you have a start date and an end date. You could type specific values in, but it is preferable a specific date back in time is entered here. That way you preserve the formula that's actually sitting in cell A2. And then A3 always defaults to the current date. So it assumes you want to go back some amount of time up through the current date. Then here at cell A4, you select the interval that you want to look at, daily, weekly, or monthly. You can see we're currently looking at individual days here in this current chart. Down below here are the default values for the length of the period. So if you're looking at daily, this says we're going to use 1 full month of daily data. If you're looking at weekly, we're going to go across 3 months, and if you're looking at monthly, we're going to look at 2 full years or 24 months. So you could change these values here, even though they're not engraved gray, because they're typically not changed, but you could change them, and then it would just impact really how far back in time you go for the interval that you select. Now, this worksheet is set up so there's two distinct parts to it. There's this left part that has to do with data pulling, and then this right part that has to do with the actual data that's shown in the graph. So once you've let's say I want to switch to a different ticker so we can see this update, but I'm going to keep the period daily. And you can see here it's updated the prices, but I'm still showing the previous ticker in the graph because nothing's changed over here on the graphing side. So what you do is once you've got the data pulled, then you select graph, and now you'll see the graph data to the right here gets updated, and now they're in sync. All right, so the use of the worksheet is pretty straightforward. You simply indicate what data you're interested in, change it to whatever you want. The data will be pulled, and once you've pulled the data, you select graph. Now you notice in the graph there's two lines. One is the price line, and the other one is known as best fit. If you prefer not to see the best fit line, just select no show in cell H1. Now one thing I want to point out is if you scroll over to the right here, there's a cell AU6 that controls how the data is pulled. Right now it's using what's referred to as method 1, but there's two methods you can use, and a third method just means you're disabling data pull altogether. Now, started off when this worksheet was being developed, the intent was to use the Microsoft Excel StockHistory function, and it still can be switched to if you desire to use that, but there were several concerns with that, which led to the development of a more robust approach called the Polaris Direct Data Retrieval method. So here's some information on the StockHistory function call, and it points out over here that it requires Microsoft 365 edition, but not all users have that edition, and therefore would not be able to use StockHistory function. Also notice that the data source is a third-party provider named Refinitiv. So if you were to select method 2 and use StockHistory function, when you open the spreadsheet, this disclaimer appears at the top, and then over the far right there's a X that you can click on to remove that. But it does take up some real estate, and often it'll cause the tabs at the bottom of the spreadsheet to be hidden. This section of the video has been added since the original video was recorded to deal with some confusion that's come up around the dates that are displayed here on the left where the data section is compared to the dates that are displayed over here in the graphing section. When the interval is daily, those dates are exactly the same, but when the interval is weekly or monthly, the dates differ. Changing the interval to monthly and then graphing, you can now see that the dates are different. Here in the first row on the data side, it's August 19th, but it's August 31st over here on the graphing side. In fact, what you see in the graph is 8/31, and then you see 9/30 as opposed to 9/1. So over here on the data side, you have the first of the month being shown, but over here on the graphing side, it's the end of the month. Now this is the case regardless if you're using the Polaris Direct Data Retrieval method or the StockHistory method. For an explanation of what's going on, let's look at the documentation provided with the StockHistory function. Here we see the 6 values returned for each row, namely the date, close, high, low, and volume. Now it shows here for the date that the first valid trading day in the period is returned, and then the closing price is of the last trading day in the period. So we need to make sure we understand the difference between first trading day in a period, also known as an interval, and the last trading day in a period or interval. The retrieved data here on the left always shows the first trading day of an interval, whereas here on the right, the graph always shows the last trading day of the interval. So when using the interval daily, the first trading day is that day, and the last day of the interval is the end of the same day. When the interval is weekly, the first trading day is Monday of a week, and the last trading day is Friday of the same week. And then when you do monthly interval, the first trading day is the first of the month, and the last trading day is the end of the month. So the graph shows the closing price for the date indicated. But when looking at the data retrieved, the closing price is for the last trading day of the interval, not for the date shown. Said a different way, the graph aligns the date with the closing price by using the last trading day of the interval, as opposed to using the first trading day of the interval like the data retrieval section does. Now back to the original video. This worksheet has gone through several rounds of development. The first round was intended to be quick and easy. So everything was done right here in Excel. There was no VBA code, and relied on just using the stock history function provided in Excel. Well, as we've been talking about, there's some limitations with the stock history function, but ran into a real problem when the graph would be updated by just calling stock history and then graphing the results directly. So that led to the second round of separating graphing from the data retrieval. Well, after round 2 was completed, it was noticed that these other limitations dealing with the stock history function were significant enough that a more robust approach was needed for retrieving stock price information. So went to round 3 and added what's referred to as the Polaris Direct Data Retrieval method. This method uses the Excel function called web service. Also, what was needed is to add some VBA code to allow the user a way to switch between using the Polaris Direct Data Retrieval method or use the Excel stock history function. Well, soon after round 3 was released, it was realized that by using the web service function, the personal access token to a third-party price information provider was exposed. This resulted in a round 4 where the Polaris Direct Data Retrieval method was moved into VBA code. Another round of development quickly followed. It added support for a best fit line in the graph. It includes some VBA code. Well, that leads us to possible future round that would eliminate the separation of data retrieval and graphing and return back to a single coordinated transaction, which is where we started from here in round 1. This would be possible because the Polaris Data Direct Retrieval method is now in VBA code, but it would not be possible with the current implementation of stock history because that function cannot currently be run in VBA. So it's unlikely that this round will be implemented anytime soon because we want to continue to give users the option of using either the stock history or the Polaris Direct Data Retrieval method. Hopefully over time the stock history function will become more robust. So then just want to realize that if it wasn't for the history of the development, probably would not have ended up with a separate data retrieval step and a graphing step. The benefit of having 2 separate steps is it ensures graphing is not attempted until data retrieval is complete. The downside is it requires 2 steps to the user. The user must enter what data is to be retrieved in cells A1 through A4 and then follow that by clicking A7 to have the retrieved data graph. I also want to quickly mention another new Excel feature that appeared around the same time as the stock history function called link data types. So if you come over here, let's say to this cell here, and you go to data, you can now select one of these linked data types. And so if you, let's say, select stock here, you can see here that it's changed things around, and I can now click on that and get a whole bunch of additional information about the company and scroll down, and it's somewhat of a useful feature, but the implementation of it is a little rough right now. Not all companies are available found, and also you get the warnings when you first bring the spreadsheet up that a linked data type is being used. Right now, I recommend you don't use this feature. So in summary, the price intervals worksheet allows you to have a better context in terms of price changes over a specific interval, and helps you make a more informed buy and sell decision when a threshold is reached. Now, I want to caution stepping too much into technical analysis. Not an advocate of technical analysis, suggesting that this kind of thing be used just to round out your thinking regarding price movements as they relate to these thresholds. All right, well, thanks for watching.